This is the briefing for Friday, September 5th. This is one tough market in terms of the stock indices themselves. Individual stocks, they're easier to analyze, at least than the indices themselves right now. The problem is that when the indices, if the indices decide to rally substantially, all stocks or most stocks are going to rise with it. But on the other hand, if the indices decide to sell off, then there's going to be a sell-off in individual stocks as well. So it's something to keep in mind as we go forward. Now, we had the employment numbers that came out this morning at 8:30 Eastern Time, and they were mixed. The revisions were critical, and I think 22,000 jobs were created in last month, but there were revisions from the previous 2 months of about, I think it was 21,000. You have to check that. So we opened up and went higher, and it looked like we were going to break out above this area of rotation in the spiders and the Qs and then in the IWM. I don't know if you can notice it here, but there's a pretty big selling tail in the Russell and the IWM. It goes all the way up to here, and then it started selling off and then came all the way back down again below this 237 area. So basically there was no follow through. We got a pretty big move at the open, and then of course there was a little bit of follow through to the downside, and then we had a little bit of bounce going into the close today. Overall, though, if you look at the trend in market breadth, it is beginning to trend higher. The same thing with the Nasdaq. Same thing with the Russell, except for this one day. But you can see we even trended up a little bit higher in today's trading in terms of that. Net volume was up today. It looks good. NYSE was a little bit shallow, but the Nasdaq and the Russell net volume looked pretty positive. So basically, we are stuck in an area of pause or rotation with some volatility at an upper extreme that is at basically the all-time highs. So the question is there enough strength internally in this market to ascend it vertical development higher, or are we going to see some type of rotation back to the downside? So the question is, and this is a daily chart on the spiders, and you can see this rotational pattern that we've been in for quite some time, testing the upper extreme at the 647, 648 area. And then of course, if we cannot break through, then it's going to suggest that we're going to see some type of rotation back down to test the 630 area. As you can see there. Volume ticked up in the spiders slightly. 52-week highs minus 52-week lows ticked up nicely. Breadth ticked down slightly. You can see this is part of the problem. The breadth numbers have been very, very muted and really not anything that we want to write home about that would suggest that there is a real strengthening within the market from an internal perspective. Same thing with the Qs. You can see testing this upper extreme at 684, 685 area, then backing off pretty significantly. Trading below today's low is going to suggest potential to test this 561 area, the lower extreme of this area of rotation. And of course, net volume ticking up, as I said before. And breadth ticking down slightly, but basically muted, really not a whole lot of strength showing in terms of the breadth indicators. And of course, the Russell, you can see that's area of rotation. Now, there's a buying tail right here and a selling tail right there. Now, if you can see that candle clearly in the Russell, this is a day where neither buyers nor sellers could gain control of the Russell. So it came down, buyers stepped in, it went up, sellers stepped in, and we ended up closing right at this upper extreme at 238 level. So very interesting in the Russell. Volume up a little bit, breadth down, and net volume up slightly as well. So it's going to be interesting to see the resolution of this, and if we do break out to one area or the other, it really is going to be important, especially if it's to the upside, that we see the market internals begin to strengthen pretty significantly because they simply are not doing that right now. The higher probability based on the internals is that we're going to see some type of rotation back to the downside, but that's yet to be seen. So in terms of overbought and oversold, we were approaching an overbought condition. Now we're basically neutral in the NYSE, neutral in the NASDAQ. And in terms of net volume, you can see this is NYSE total volume, just basically muted, gets kind of right along the floor of what typically is normal, or I just would say lower volume in the NYSE, and of course net volume ticking down slightly, but still positive. And then of course a little bit of volume ticking up in the NASDAQ, although the trend is down, and then net volume picking up nicely in the NASDAQ as well. So really it comes down to what happens here, what happens here, and what happens here. If we cannot break through, we had a false breakout today that was quickly retraced. If we cannot break through, then the higher probability is traders are going to realize that there's not enough strength from an internal perspective or volume perspective to drive price higher. So they'll start closing out some positions, and you'll see the indices begin to rotate back down to the downside. If and when, and if that's the case, when we reach these lower support areas, that's going to be the critical time to really come up with a good strategy, because if we break through, it could suggest an intermediate term type of correction to the market. On the other hand, if we rotate back up again, then it would be an attempt to see another breakout to the upside at the upper extremes. Going to be an interesting week next week. Have a great weekend, and I will pick this back up on Monday for subscribers.